Hey, what's up, guys? It's me, Christian. Welcome back. Thanks for tuning in. I am doing a weekly, update so far. It is the 17th of March, and so far I am on day 2 of 5 on my Lucids account. I'm already at the $2,000, so I'm eligible for another $10,000 payout. I'll be going over a couple of trades that I took this week and why I took them, and yeah, I mean everything's it's not going to be hindsight, so you'll get to see the before and after, and where I took my entries and where I took my profits. But yeah,
Yo,
yeah. What's up?
there we go.
Let me put the volume up a little bit.
You're good.
There we go. So I'm looking at this. I'm not gonna lie, bro. I mean, personally, I think that we're probably gonna just range bound all day today, just because, like I said, it is the day prior to FOMC, and we do have this 4 hour fair value gap in here. So I mean, depending on how the next 4 hour candle opens, well, it already opened. So we do have this fair value gap in here. It could possibly draw down to this low to go higher. But right now, because we also had S&T with YM, but it would just be a little bit more riskier to take a trade. Like, yeah, we did have S&T with YM here at this high. So I would just be mindful to trail your stop loss as it continues to go up. So like if we close above this down close candle here, and move this out of the way. If we close above this down close candle here, then I would probably, sorry, that's my dogs. I would probably trail your stop loss to like the low of this fair value gap then on the 5 minute, which would be like right in here. So I would probably trail from like where we originally had it to this fair value gap as price continues to go higher. That way you're not risking as much. You feel?
Yep, absolutely.
But yeah, no, let's go over a couple of trades that we took this week, and we did some call outs as well. Might as well share my screen here. Let me see. Let's see here. Yesterday at 4 o'clock, we were looking at NASDAQ. And actually, let me pull that up too on TradingView. That way we can see why I was looking for shorts at first. At 2 o'clock for London session, you can see here, right, that we swept this high here and we created a low, created a higher high, broke structure on the 15. And you can see where my entries were. It was literally just on the breaker and the up close candle. And then I had my stop loss above this high. And then I was essentially, because this was Asia, right? This was London. So I was anticipating that we were going to trade back and take out the liquidity of Asia. What ended up happening, fast forward, right? So if we go to the chart itself, the reason why I was short was because on the hourly, we had going into the week, we had this hourly fair value gap in here. And I was still thinking that we could probably go a little bit lower and at least take out Asia range. So I was hoping and anticipating that London would create the high of the day and then we would just trade lower. But that wasn't the case. We ended up having S&T with YM. YM actually took out that low, which was right over here on Monday. So we had a fair value gap fill on NQ, and YM failed to do so. So we had weakness here with YM, and it took out Asia range low because of the 2000. If we go to like the 15, you'll see it, right? London made the high, taking out Asia range high, taking out the low, and then NQ failed to do so. So we had S&T, and then we ended up trading higher. So well, I took that into consideration that obviously YM took the low and NQ failed to do so. You can see TradingView, right?
Yep, I can see
Okay,
it.
cool. For a second, I thought I was showing Discord, and you were just looking at the Discord. But where was it? From there, I was looking at possibly looking for longs, and I'll show you the entries that I took on that and kind of explain to you why I took those longs. So you can see here, right? This is still on the 50-minute time frame. We had S&T with YM. We failed to take out that low, which was Asia session. And I just waited until price gave me an opportunity to go long in here. And you can see, obviously, these were the shorts that
So
I
were
took.
those relatively equal lows?
Yeah. So if I go to, because we ended up taking out these lows here. with that candle. So it was a 15-minute sweep, and then I dropped down to a lower time frame, and I looked for a bullish, um, like a bullish fair value gap after sweeping that low. And obviously, once we had that change state of delivery right here with this down close candle, I added more positions here. You can see, I literally rode that all the way up and took profits on the way up. And so, because I guess you could say YM took out the previous session low, so London made the low of the day on YM, but then on NQ, Asia was the low of the day. So going into New York session, we had a continuation of, because you can see right here at 10 o'clock,
Yep.
10 o'clock, 4-hour candle, we had a continuation going higher. And what I ended up taking my profits at was at a liquidity zone, Friday's high, because we took out previous day low, right? Which is a liquidity zone. Previous day low, previous day high was my target, because we also had this untapped daily fair value gap. So that for me was a draw on liquidity going into Monday. So at first I thought we would just, respect that hourly fair value gap, but we didn't. And we ended up trading into this daily fair value gap. So let me go ahead and change the color of this to red. And then go to the hourly, right? So previous day high was this high here. And we took out this low here. And as soon as we took out this low, we had a change of state of delivery right here on the hourly. And we were just, if you were to drop down to like a 5-minute, you can kind of see the market maker sell model into a market maker buy model. So I got in like right around here, and then I was targeting this high, and this high. And as soon as we took out that high during PM session, we ended up going back into the range. So yeah, I mean, I pretty much ended here or somewhere in here, because I trailed, I think I trailed my stop loss and I got stopped out. But I was at least still able to catch majority of the move. And then going into today's price action, having that SMT with YM, we ended up taking out Asia sessions low during London. So to me, this kind of looks like accumulation, manipulation, and then distribution to the upside. And I was just targeting previous day high. So going into London, you can see here, we had SMT with YM in here, where YM made the higher high and NQ made the lower low. And you'll notice that we ended up breaking structure right around 3 a.m., which is usually where we have some type of volatility injection. Can you hear me? Just want to make sure.
Yep.
Yeah. So yeah, right at 3 a.m. 3 a.m. to 4 a.m. is like the sweet spot for London. Just like how New York session is from, you could say from 7:30 until 11, but the sweet spot is from 9:30 until I'd say like 11, 11:30-ish. London session sweet spot is from like 3 to 4. So like honestly, if you want to wake up for London, like you just really just got to be up for like maybe an hour, hour and a half. So it's not that you got to be up for the full 4 hours. I just like to see, what we did at the beginning if we took out Asia session, or if we took out Asia session high and targeting previous session liquidity. But yeah, I can show you exactly where, because I sent you the link, but I think you were sleeping.
I was definitely knocked out.
It's all good. There we go. Here we go. So yeah, let's see here. Because I was going over NQ during the stream, like right around in here, like letting people know, like, hey, like if we close above this inversion fair value gap, right, then we could probably look to go long in here, and then place your stop loss right around this down close candle here, because this was a 4-hour low that got ran. So I'll show you what my like thoughts were going into this. So yeah, I almost got stopped out too. That would have sucked, but here I'll show you. Here we go. So you can see right at 3 a.m. We had that inversion fair value gap. I went long right in there. Originally, I had my stop right in here, but I ended up bringing it down to this low here. That was the first key level that we disrespected that was bearish on 3 minute. I believe it was on a 3 minute. It was a 3 minute inversion fair value gap. You can see, you know, we also have SMT. So you can see where I entered. We had an hourly fair value gap, a higher time frame key level. And then we had that inversion fair value gap in here and in here. You can kind of see it. You can see where I entered, right? All around that key level. And then we had a 5 minute change of state of delivery where we broke this high here. So now these two down close candles are going to be where I would be adding more positions. And then honestly, like you can see, I almost got stopped out, like literally to the tick. Like one more, I'm surprised spread didn't even get me because you can see where my stop loss was. I almost got stopped. I would have been sick. But yeah, I was targeting previous day high. So that was just the draw on liquidity. And you can see on the hourly, the next hour, you can see here, we also have this candle's low being swept and then a second candle closing back within the range. So now swing points, one thing that I'll go in more in depth with you is that swing points on the higher time frame are lower time frame market maker buy models and sell models. So you just got to see, you got to time it right with the expansion candles. So even though this low to this high is my dealing range on the hourly, we have this higher time frame key level, which is this fair value gap, right? So when I always reiterate that on the hourly, you should always look for fair value gaps or highs or lows to be either swept or a fair value gap to be rebalanced. So that's all I'm looking for on the hourly. And going into today's trading session, Asia, was swept by London, so I was already anticipating London to be the low of the day, and then we traded into a fair value gap, right? So we rebalanced and imbalance, and now this low to this high is my dealing range, right? So 50% comes in somewhere right in here. So this would be in discount, as well as we have a new hourly swing point. So we have yet to take out this low here. So we should be looking to go back into premium this high. So again, right, this swing point and this swing point is a market maker sell model into a market maker buy model. So you could see, and we also took gold as well. I was just targeting previous session low. You can see right where I shorted. I literally shorted right after the hourly candle closure, put my stop loss. I had it originally above, what was it, the 5 minutes order block, because I have candle 1, 2, right, change state of delivery, entered in those uh, candles here, but I had my stop loss originally above this candle. And then once I saw the new hourly candle open, trade higher, and then trade lower, I adjusted my stop loss from this high to that high. And then you can see, I bought during Asia, took it all the way up, then I took it down, and I was just targeting this low here. But yeah, so then I can go back into, let's go back to trading view. Yeah, I mean, I guess, do you have any like questions at all? Like anything that you can think of right off the bat?
Not right off the bat. Go over that gold one for me again.
Okay, so let me delete this here. Delete 4 drawings. Let's start from the daily. So obviously we had this daily fair value gap in here, right? This low here. This would be external range. This would be internal. So we had taken out this low here, and I was anticipating for today a run of a previous day high, and you can also see like it's also a fair value gap in here. But I wasn't too confident in this because I do want to see possibly gold trade a little bit higher into this imbalance and then trade lower, just because I do want to see, because on the daily we've broken structure, right? And I want to see these lows get taken on gold because I'm anticipating a market maker buy model into a market maker sell model on the higher time frame. So if I go from like that to an hourly, that was like a 4 hour high that got ran at like 2200. So you can see here, right? Again, the swing point formation. This is 1800. So this is the opening price. We have candle one, candle two, took out previous 4-hour high. So that's the 4-hour high, 4-hour low. And going into candle three, did we take out the previous 4-hour low yet? No. So going into the lower time frame alignment, which would have been 15-minute, you can see here, right? It would have been 1800 is candle one, 22. Right, let me go here, just make it quicker. There we go. 1, 2, 3, and 4. So on 15, right, it's a little choppy, but essentially from 18 to 2200, we're on the buy side of the curve, right? We're going and targeting some type of liquidity. In this case, it was this New York AM session high, right? And we took out Asia session high here. And plus we're above midnight open. So there's a lot of confluence, like a lot of steps going into this, but once you get familiar with this, like I said, this is a 4-hour swing point, right? Candle one, two, and three. On a lower time frame, this is going to be a market maker buy model into a market maker sell model. That's why you could see, right, all these lows here are liquidity. And like during Asia, you saw in that screen recording that I was looking to go long in Asia to take out that resting liquidity here and then look to go short during London, right as we broke this structure here on the 15. So we have a breaker here, this high, right? High, low, higher high, break. So we have a new dealing range here from this high to this low. Have we taken out Asia session low yet? No. So we can expect price to want to come back into some type of key level. And here in this case, we had a 15-minute fair value gap, right? And this is candle one, this is candle two, and this is candle three. So candle three was right at 2 a.m. And you can see here, right, if we draw out the open, did we trade above the open into a key level? We did, this fair value gap. And then what I waited for was a 5-minute break of structure, which was right in here, right? We had a low, high, lower low, lower high, break, right? Return into a very, very small fair value gap, which was right in here. You can barely see it, like, but if I super small, but that's a fair value gap. That's an imbalance. So we traded back into that, right? And if I draw my fibs, my dealing range from this low to this high, we traded above 50%. So I unfortunately missed out on this entry, but I just waited until price broke below these up close candles here, right? And then the next hour opened, traded higher into these up close candles. So I literally had a short position right in here. I have my stop loss above this high because we rejected this fair value gap, making this a protected high. And then I targeted right at 6 a.m. We have yet to take out London session low. So I took a partial in here. And then I had another partial at Asia session low here. And we got that right away. It was like a matter of minutes. It was, I think it was what, 1, 2, 3, 4, within an hour. But then eventually, during New York session, you can see, right, that New York session took out London session high. So then New York created the swept liquidity, and then we broke structure in here, right? So we have another breaker, high, low, higher high, break, comes back into this up close candle, and then takes out this low here, and eventually even this low here. So we completed a market maker buy model into a market maker sell model. Well, I was pretty much done right here because I this is all I wanted. But now we're chopping here. So depends on what we end up doing. We could possibly continue going lower, but like if you look at this, it's sideways. It's just consolidation. But even like in these types of conditions, you can still try to, see where are you at in like the market maker buy model or sell model. Because I mean that's pretty much all what the market is. It's like it's either a market maker buy model or market maker sell model. You're either on the buy side of the curve or the sell side of the curve. And then you just got to line it up with resting liquidity on this side of the curve. So that's why you can see like I'm always in and out because I'm just trying to take profits at logical areas. But I mean, that's how I've been able to pretty much get funded with Lucid as well as, get my second payout within a week. So, but yeah, any questions?
No, man, it all makes sense for the most part. I guess I just, probably have to work on just more better identifying where I am in the market maker vibe versus like market maker sell.
Yeah. So, I mean, I guess what I would say that would like help out is always start on a daily, right? And look at past things that have happened. Like even like this right here, break this down so that you can train your eye can see this. And whenever we take out a high, right, just remember this. Like if we take out external range, we're going to want to come back into some type of internal range, right? This is external on the higher time frame, right? We took out this high. Where does your eye draw to after taking out this external range? You got to find some type of internal range, right? Like pretend none of this has happened yet. If I replay this here, even like here, right? Like none of this has happened. Control, delete this. After taking out external range, right? We have a low, a high. We also have this fair value gap in here as
Just
well.
say that's where my eyes go to.
Right. So we have an internal range in here. So then that's going to be your internal range. So you want to see a run of these lows here. So going from the daily now to the 1 hour, you have some type of roadmap now, right? Where you can now start to visualize, well, we have original consolidation, right? You can tell we're on the buy side of the curve, right? We open up into this week with a new week opening gap, which is going to be some type of resistance. From here to here, we take out an hourly external range liquidity, right? Monday going into Tuesday, we broke structure here and we have this hourly fair value gap, right? So this is going to be bearish. We want to see price trade back into this fair value gap. And now we're going to be looking to take out this low. So we play this out a little bit. Okay, we're in our point of interest. We got to go to a lower time frame. And would you look at that? Asia, right? We have a break. We have a 15-minute fair value gap in here. So we want to either see price come back into this range during a session, right? So if you just play this out. London traded right back into this fair value gap. I dropped down to a lower time frame.
So would London have been like the second stage?
Yes, exactly, right there. See, it's starting to click. You wait for this to play out where we break structure, right? We get a new dealing range. Have we taken out the low yet on hourly? No, right? So this is your bread and butter. This is what you look for going in every day. Like look for the hourly key level. Wait until price is tipping its hand and letting you identify like, oh, okay, we're in my POI. I want to see price go in the direction that I'm anticipating and then come back into some type of key level from that expansion leg. So like right here from this low to this high, right? This is my new dealing range. Where is my premium discount? Okay. Premium's up here, discounts down here. Do I have a key level that is somewhere in premium? Because I don't want to be a seller in discount, I want to be a seller in premium, right? We want
Mm-hmm.
higher prices. So once we go into that, what are we anticipating? We're creating a swing low to a lower high, right? Because this high is going to be lower than this high, and we have a swing point formation. So we have to wait for the 15-minute swing point to form, where we have a run of a high here, a bearish engulfing candle, dropping down to a lower time frame, so we can even go to a 3-minute. What does this look like?
Market maker buy to a market maker sell.
Exactly. So you wait for this to happen, right? Where we break structure, and then we have an order block. Fair value up. There's your entry. Go short. Retest. Put your stop loss above the high. And now target. Obviously partial here, but originally we're targeting this low on hourly. So there's your trade for the day. Once we hit it, we're done. We're done for the day. Because there's nothing more to anticipate, right? We took out external. So then now, once we took out external, we're going to go back into internal and then probably go back to external. So if we play this out, we have like this fair value gap in here. See? So from here to here is your new dealing range. This right here is the same thing. It's a market maker buy model to a market maker sell model, dropping down to like a 1-minute time frame. Yeah, you can trade this if you want. The lowest I go is like 3-minute, but that's because I'm going based off a 15-minute swing and I'm looking for that market maker buy model into market maker sell model. Here, we had that big fair value gap in here, right? Same thing. You're on the buy side of the curve, high, low, high, low, high. Where do we break? Here, right there. From here to here, dealing range. Oops, wrong one.
Gotcha. So your dealing ranges are break of structures.
Correct. Your new leg of price. You want to be, depending on what you're anticipating. Like if you're looking for a buy, then you're going to be looking for, this dealing range in here. This low. Well, you can go from this low to that high, right? We trade back into 50%, order block, fair value gap, boom, take out this high, you're done. Here, right, we're building a narrative that we're trading a market maker buy model into a market maker sell model, where the low risk is formed here. This is the first stage, and then this is where you would look for price to come back into some type of key level, look to go short in your POI.
Oh, so you're putting your key level in to discount. Well, in premium.
In premium, because you want to be a seller in premium, not in discount. So you're looking for some type of key level in premium to build a narrative, right? Like if we come into, we could say even this right here is a breaker. Low, high, break, right? We'll break this low. So these up close candles here. And if we break through that and come back and retest it like we did here, we could have sold there. It's going to be a sensitive spot in the market pretty much until we get to this low here. So yeah, you could have, taken this trade, but this comes with repetition. It comes with breaking down, a higher time frame. So this is my long-term perspective, right? Where I'm expecting price to come back into some type of low, right? Then you're dropping down from a daily to an hourly. This is your intermediate perspective where you're looking for structure shifts, right? Fair value gaps, key levels on the hourly. Then when price reaches your POI, you drop down to a 15. Then you incorporate the sessions. Okay, well, we had New York session low, right? New York PM lunch low, and then New York PM session as well. You can see it's starting to create the market maker buy model until we get into Asia. Asia was in our POI. Typically, I don't like when Asia is like the high of day, but it does happen. I typically like when London takes out Asia range high and London creates the high of day. But in this case, Asia was the high of day. And we broke structure, and then London was continuation of the trend at the end of Asia. And then if we wait for New York was as well continuation. So there's profiles to every day, right? Like where Asia creates the high of a day, or London creates the high of a day, or New York takes out London high and Asia high, and then it creates the low of day. So it's just being able to read that live every day based off of your key levels and whatnot. So watching someone who's done this for like 7+ years, it becomes becomes a form of habit. So, I mean, that's what I hope from all of this is to be able to, you know, um, have someone be familiarized with like certain things and like, being able to just create their own model and take, little pieces from what I've learned over the years and then create your own model at the end of the day. Because at the end of the day, I don't know how long I'll be, on this planet for. So at the end of the day, you want to be able to build your own model and be able to execute when the time is right. So like tomorrow we have FOMC. So after all the years of me trading, like there's no reason for us to even be in the market. Let me just move this here. So you can kind of see like prices just consolidating right now. With the
Yep.
high impact news tomorrow, like we could probably even create a new range or something or keep going higher or whatever. But I'm anticipating price to go lower and then create like some type of 4 hour fair value gap or 1 hour fair value gap for price to come back into on Thursday and then have a continuation to the downside. Because for me, I want to see these lows get taken, these lows here, relative equal lows. And then overall, you can still see, right, this low here and this low here. So you can kind of say that we're in the beginning stages of a 4 hour market maker buy model into a market maker sell model. So I got long-term objectives here that I'm anticipating. And it all stems from like the monthly time frame. We have this fair value gap in here, and as well as from this low to this high, we're in a premium, right? So if the monthly is in a premium, should I be looking for buys or should I be looking for shorts? In this case,
Right.
we're in a
Looking
premium,
for shorts.
looking for shorts to go what back into discount. So we're building a narrative on the higher time frame, and it's pretty much building like a roadmap, right? If I'm going based off the monthly time frame dealing range, then the daily has to also be incorporated where we have a break of structure, key levels on the daily that price is trading back into, respecting, and then obviously resting liquidity on the downside to be able to target. And then obviously higher time frame S&T with the corresponding pairs. But yeah, that's pretty much it, man. So you're almost funded with Lucid, right?
Yeah.
What's the balance at?
So what's the balance at?
Yeah.
Oh, it's at 1955.
1955, and we just need 3,000, right?
Yep.
Nice, nice. Yeah, I mean, even looking at right now with NQ, right? That 4 hour fair value gap, I think that might be a new
Yeah,
low.
I honestly closed out of that NQ trade just because it just started getting way too choppy for me.
Yeah, because like if we look at the daily, right? Let's turn on uh, 2. We've created. Let me turn this to use midnight. We created the low, we created the high, and now we're gonna close in by printing the close. So for the day, we had a open, low, high, close. And you can see PM session now is trading back into what? We took out external range. We're trading back into internal range. So we're probably going to range bound in here. I'd be shocked to see if if we do take out this load, then cool. We could have had a PM session trade in here. But normally, like, I wasn't really anticipating much for PM session. Um, just when you messaged me, I was just like, we could see it go up, but to me, this 4 hour low, which would be, let's see here, delete this, be this low in here. Let's do H for low. I'm gonna delete this here. Yeah, so in this case, it was New York lunch lows is what we could possibly trade back into. Um, let's see here. You can kind of see, original consolidation. So yeah, once we break, let me turn off this. So we traded through this bullish fair value gap. What is this? Let me delete this. That's the premium. So then we traded through this bullish fair value gap here. So then this becomes an inversion fair value gap. And I see that we retest. I typically, yeah, we did retest it. And we took out this high here. So typically with stuff like this, you can go short here. And I mean, a fair value gap, you're supposed to put the stop loss at this candle high. But if we have an inversion fair value gap, I typically just go, I start off like right at the low of this candle here. And if we start to trade lower and say if we close below these up close candles here, then I'll go break even or I'll go below the inversion fair value gap. And then like let's say we close below these up close candles here. So we have a CSD here. Then I can start to trail this down, you know, as price goes down. So you can see, right, like you can either look to take a short here, or you can wait until price breaks below here, comes back, retests this up close candles, and then trade lower to this 4-hour low, because that's that 4-hour imbalance that we have here after taking out this high in here. So see, it's either price is going from internal range to external range or external range to internal range.
Yep, definitely makes sense.
So yeah, I mean that's pretty much it, man. We can watch FOMC tomorrow, and we can just watch the fireworks, and then we can try to come up with a roadmap for Thursday and Friday. See what kind of let's see what kind of daily candle we print for Wednesday. We could possibly have like a midweek reversal template, or yeah. So that Thursday, Friday should be a little bit better to trade. Sorry, man, I'm tired.
No, I get it, bro.
I did a London session. Now I'm exhausted. I had to stream last night, so but hey, it's worth it though, you know.
Oh,
So
100%. I mean, London looks like it paid out.
no, it sure did, sure did.
So
So
I'm gonna definitely start getting up for it.
yeah, I just need an hour of your time. You can just literally, we all just shoot the shit in there too.
Nah, man, I'm full sessions with it.
But but all right, brother. I'm gonna
All
let you.
righty, man. We'll catch you tomorrow.
Sounds good. I'll send you the link.
All righty, sounds good.
All right, peace.
Later.
All right, so let's do the update on Lucid Trading. Go ahead and log in to my platform. So you can see here, this was after payouts. So last week we got paid out. Let's take a look. Account summary, right? Lucid funded. We hit that $2,000 threshold again. So I just got to hit 3 more days of minimum profit days of 150. And then I'll be eligible to take out another 10,000, totaling up to a total of 20,000 on the month. But if we go to Tradestia, so far, right? That's how much I'm up on the month. I mean, I don't really have that big of a win rate. It's decent, but you don't really need that much a win rate to be able to make money throughout the month. But probably gonna skip tomorrow, and yeah, that's it. I'll catch you guys later. Peace.